HBAR holders, you've been told half the story. But what's happening right now in the shadows of the Hedera network could decide your wealth in 2025. 87.56% of the entire HBAR supply is now in the hands of whales. And they didn't buy by accident. But here's the question no one's answering. If they're buying this aggressively, why hasn't the price exploded yet? Stick with me for the next 28 minutes, and you'll learn. 1. The 3 hidden whale moves happening right now. We're not talking about a few million HBAR. We're talking about a systematic, coordinated accumulation that has been building for weeks, silently and out of view from the average investor. 2. The exact price points they're targeting. Whales don't just buy randomly. They have targets, and we're going to show you the key resistance and support levels they're watching, and why their strategy is both a massive opportunity and a potential trap. 3. Why a 32 cents retest could be closer than anyone thinks, but only after one risky twist. The breakout everyone is waiting for is coming. But there's a final hurdle, a last-ditch attempt from shorts, that could create a major shakeout before the real move happens. If you're interested in this topic, hit the like button, subscribe, and type interested in the comments. And I will give you a heart. And yes, everything I'm about to show you comes from on-chain data, official Hedera updates, and verified analyst reports. No rumors, no hype, just facts that the mainstream isn't showing you. This is the playbook the whales are using, and by the end of this video, you'll be holding it too. On-chain data is a funny thing. It doesn't lie. It's like a digital footprint in the sand that anyone can follow if they know where to look. And what we're seeing right now is shocking. Whales have increased their holdings from 81.72% to an astonishing 87.56% in just 1 week. That's not normal accumulation, that's an ambush position. They are cornering the market's supply. But here's the twist. Despite tens of millions of tokens leaving exchanges and moving into these high-net-worth wallets, BAR's price has barely moved above 26 cents. It's like watching a giant rocket being fueled, but the ignition switch is still off. So are whales betting on a collapse first before the breakout? Are they positioning themselves to absorb a final dump from panicked retail investors? Or, is this the quiet before the storm? We'll get to that, but first, you need to see what happened the last time whales moved like this. Because history often repeats itself. Take a look at this. The chart on the left is July 2021. Back then, whale accumulation spiked hard while the price flatlined, just like it is today. Small price moves, low volatility, everyone was bored. They thought nothing was happening. Then 3 weeks later, boom, a 57% rally took place almost overnight, catching everyone off guard. Now, look at the chart on the right, which is right now in 2025. The exact same wallet patterns are appearing, according to Whale Alert and Hedera Explorer. The wallet addresses that started accumulating in July 2021 are active again. They're following the same script. They are loading their bags while you wait for a sign that the price is moving. The key difference this time is that the stakes are higher. Back then, Hedera's market cap was a fraction of what it is today. We're now an $11 billion project, with a 7.6% surge in 1 day recently. The groundwork is already laid. And all of this is happening right before the Hedera Governing Council's next major vote. This could be the match that lights this fire. It's the final piece of the puzzle that was missing back in 2021. But if the setup is so bullish, if all the historical data points to an impending breakout, why are short positions quietly stacking up in the background? You see, while whales are accumulating long-term holdings, day traders and short sellers are betting on the price to drop. They're borrowing HBAR and selling it, hoping to buy it back cheaper. Could someone, maybe a large institution or a coordinated group, be trying to shake you out before the pump? Are they baiting you into a moment of panic so they can scoop up your HBAR at a discount? Let's follow the money, and it leads to one surprising place. We're going to look at the wallets that are accumulating, and the ones that are trying to profit from a price drop. The data will reveal a powerful truth about who's really in control. Let's look at the numbers. BN Crypto reports that in the last week, large HBAR wallets, over 1 million tokens each, increased by nearly 5%. Wallets holding over 10 million HBAR jumped almost 4.5%. This is the digital equivalent of a massive bank run, but in reverse. Money isn't leaving the system, it's being hoarded. At the same time, exchange net flows went negative, meaning more HBAR is leaving exchanges for cold wallets than is coming in. Now, for those who don't know, a cold wallet is an offline wallet. It's where big investors store their crypto for the long term. They don't want to trade it, they want to hold it. When you see this kind of outflow, it means the supply available for day-to-day trading and selling is drying up. It's the kind of move whales make when they're locking up supply before a run. They're squeezing the available tokens, making it easier for a small spark to ignite a massive fire. They want to create a supply shock. It's a classic chess move, and it's happening right now in plain sight. So if supply is drying up on exchanges, and the whales are hoarding tokens, why hasn't demand caught fire yet? Why is the price stuck in this narrow range? The answer isn't in the news headlines or the latest tweet. It's hiding in one technical formation that traders have been waiting to see confirm for months. It's a pattern that, if it completes, has historically led to some of the most explosive price action in all of crypto. But it's also a pattern that has a history of failure. It's the ultimate make-or-break signal. And right now, HBAR is teetering on the edge of confirming it. Right now, BAR's chart is showing the early stages of an inverse head and shoulders, a textbook bullish reversal pattern. Look at the chart. You can see the left shoulder, the deep trough of the head, and now the right shoulder is forming. This is the market's way of signaling a major shift in sentiment, a transition from a downtrend to an uptrend. But here's the kicker, this setup has failed before. The last time this pattern tried to form, it collapsed because of a governance vote delay. A simple, bureaucratic hiccup killed the momentum. And guess what's on the Hedera calendar next month? Another governance vote. The very event that could confirm this pattern and trigger the breakout to $0.32 is also the very thing that could cause it to fail and send us back into a period of stagnation. The tension between the technicals and the fundamentals has never been higher. Governance votes sound boring, right? You probably don't care about a bunch of corporate board members casting ballots. But you should. You should care, because behind the scenes, these votes decide the fate of major partnerships. They are the keys to a kingdom of corporate utility and institutional adoption. And based on job postings on sites like LinkedIn and the dev commits we've been tracking, there's one corporate name floating around that could blow this whole market wide open. A company so large, so influential, that its partnership would instantly legitimize Hedera in the eyes of trillions of dollars in institutional capital. Let's look at the clues. On-chain analysts and sharp-eyed observers have been tracking a series of specific dev commits, pieces of code being added to the Hedera network. These commits align with the needs of a major enterprise, a Fortune 100 company with a massive supply chain and a need for real-world asset tokenization. We've seen similar patterns before with Hedera's past partners, like Google and IBM. Their biggest pumps came after these announcements. If these whales know this announcement is coming, their recent aggressive accumulation makes perfect sense. They're front-running the news. They're getting in position before the rest of the world has a chance. This is not about speculation, it's about anticipation. They are betting on a fundamental, value-creating event. And they're not waiting for confirmation. They're acting on the whispers, the code commits, and the job postings that give a glimpse into the future. They are betting on the governance vote delivering a clear path to this new partnership, which could be the final rocket fuel this project needs. But remember, whales don't just buy to hold. They buy to trap. And if they're planning a fake-out dump before the run, you'll need to know the exact levels to watch. You need to know the precise price points where they'll try to liquidate the last of the weak hands. This is the most dangerous part of the journey. The final shakeout. The last chance for the shorts to win. But if you have the knowledge I'm about to give you, you can use it to your advantage and avoid getting trapped. You'll be able to see their game play out in real time. According to Brave New Coin, we have a clear map. Resistance sits near 27 cents, with a clean breakout target of $0.3227. That's the moon. That's where the rally begins. But if shorts succeed in shaking weak hands, we could see a retest near 23 cents before any moonshot. That's the danger zone. That's the price point you need to watch. This is why monitoring MACD and CMF divergence right now is critical. These indicators tell us if the buying pressure is truly there, or if the market is just faking it. We are seeing early signs of a bullish divergence, but it's not confirmed yet. It's a tense standoff between the bulls and the bears, and the price will only move when one side finally blinks. The whales are ready. The question is, Are you? So, is this a 2021 repeat with a bigger market cap, or a trap set to bleed out retail before the next bull leg? The answer lies in one final pattern that almost no one's talking about. It's an indicator that combines price and volume to show the true intentions of the market. It's the final piece of evidence that will confirm whether this rally is real, or just another fake-out. And it's showing us something that should make every HBAR holder very, very excited. The final piece of the puzzle is the OBV, the on-balance volume. It's a running total of buying and selling pressure. When the OBV line goes up, it means buying pressure is increasing, even if the price is flat. And right now, BAR's OBV is climbing even while price is flat, meaning big players are loading without making noise. It's the silent accumulation that no one is noticing. Combine that with the governance vote timing, the whale accumulation surge, the inverse head and shoulder setup, and the drying up of supply on exchanges, and the stage is set for a potential breakout to $0.32 plus. If the vote delivers what's expected. This is not a guess. This is a confluence of events, a perfect storm of technical and fundamental catalysts that are all pointing in the same direction. The whales have been playing a strategic, patient game, and they are now ready to make their move. So now you know, whales are playing a long game, and you're holding the playbook. You're no longer in the dark. You're not waiting on the sidelines. You are now equipped with the same on-chain data and technical knowledge that the whales are using. The price action you see is just the surface. What's happening underneath is what truly matters.